We're joined now by Vibha Padalkar, MD and CEO at HDFC Life Insurance. Vibha, thanks so much for joining us this morning. Now, we've seen the company deliver strong numbers on all parameters this time around, actually. VNB growth has also doubled in this quarter. So what led to the strong performance, particularly on this front, and which segments are showing strong growth?
The growth in VNB, and just to recap, the 104% growth in VNB has been on the back of several things. One is that overall growth in the channels, across the channels. So, for example, our agency channel grew by 121%. Overall, our proprietary channels grew by 90%. Our direct channel grew by 70%. HDFC Bank channel grew by 44%, and so on. Online channel also grew very well. So across the board, we saw growth. That is point number one. That also gave us the traction overall in VNB. Second aspect is on the back of this growth, we also got expense leverage, which means that we had lower cost of acquisition. That was the second aspect of it. And third aspect of it is also on the back of launch of new products, which did very well. These were also higher margin products than some of the lower margin products like unit linked. Also, we continued to do very well, and this has been part of our strategy on focusing in the retirement space. And on the back of that, annuities continued to grow. So to give you a sense, the annuity growth was 70% year on year. So it was a combination of several aspects that came together.
Okay. Vibha, what's led to the improvement in the operating ROEV and also the new business premium margin? What levels do you see, both of these sustaining at?
So if you look back about 6 years, we have been more or less very steady, hovering somewhere around 20% mark on our return on embedded value. And that for us is a given. And that just shows that the business is built on a very strong foundation of profitable growth and not just top line growth for the sake of growth. Operating embedded value comprises of the unwind. So the quality of the back book is important. And this is on the back of very healthy levels of persistency that we have been showing, as well as other assumptions. Then you see the margin itself. It is industry leading new business margins. So exactly like you alluded to, just shy of 30% that we ended, 29.9% on new business margin and growing. And especially on the back of, if you look at Q1 of last year, it was 24.2% of new business margin. So expansion in margins was the second aspect. Third aspect is that you don't find any negative variances on our assumptions. So whether it's mortality assumption or expense assumption or persistency assumption. So all of that adds towards return on embedded value, and that's what time and again we have been able to demonstrate.
Right. But Vibha, what's led to the strong growth in the embedded value at 23%, and what factors would you say have led to the improvement? Also, any positive gains because of the lower interest rates?
So the embedded value, the biggest reason is, like I talked about, which is the embedded value operating profit has continued to remain strong on the back of three aspects. One is the unwind has been good, the addition to embedded value, which is in terms of the VNB growth, that has been very strong. And the third aspect is we have not seen any negative variances on experience related variances. Investment variances have been in line with market conditions.
Right. Any progress, Vibha, on Max Life deal?
No, we have not had any discussions with Max Life. But more broadly speaking, we are open to looking at acquisition opportunities that add value to our shareholders.
But, bank assurance are crucial in insurance sector. The shares of bank tie-ups or banca tie-up has reduced in the current quarter. How do you see your distribution mix changing now?
So if you look at bank assurance overall, we have talked about having our eggs in several baskets, and so that's exactly what has happened. We want all our channels to grow. If you look at our bank assurance, it has grown by upwards of 40%. HDFC Bank itself has grown by 44%. and all our partners have been doing well. In terms of your question about new tie-ups, we ended this quarter at 270 relationships, out of which 40 plus relationships were in the new ecosystem, and we are growing. Now we are slowly entering the phase wherein we are deepening those relationships. So I talked about some of the relationships on my investor call. So some of the relationships like a Cholamandalam Finance or some of the banks, whether it's a Bandhan Bank, an IDFC Bank, etc., or when you look at Bajaj Finance, we are looking at how do we move beyond just the credit protect relationship into the retail space. Same thing on the small finance banks and Equitas and Ujjivan and Utkarsh. We're working with all the small finance banks, and that's something that we will continue to deepen the relationship with them.
What is your broad strategy on growth then? Which areas are you focusing on? In the last interaction, you said that you were seeing huge opportunity in pension market. What has been the update on that front?
You know, growth is really, this is just the beginning. If you look at a recent Goldman Sachs study, so 68 million white-collared addressable population is there, out of which less than about 1.7 million people have bought insurance of any kind. So this is just the beginning in terms of opportunities for growth in India. Even before we listed and we started talking a lot about protection, now it's suddenly become the topic of discussion and people are becoming more aware. Same thing when we started talking about the retirement space, annuity space, and the need for protection in that space. Again, that started becoming a topic of discussion. So expanding these offerings to the Indian population and the uninsured or the underinsured is something that we really believe in and enthuses us. So we look at all our channels growing. Like I said, our agency channel has grown exceedingly well. Productivity of our agency channel has more than doubled. Our persistency in agency channel has been very good, 91% 13 month. And so we think agency channel can easily get up to a very meaningful number of a percentage. So it's gone up from 11% to 15%. It can easily go up to 20% business. Another channel to watch out for is our online channel. So these are all high growth channels.
All right, Vibha, thanks so much for joining us.